Hey guys, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be doing my weekly portfolio overview. We're going to talk about all the distributions I received, the individual high income ETF fund performance. So let's get started, guys. Before I start talking about numbers, I'm going to go over what my account is all about. This account started when I took an $80,000 HELOC loan against a rental property I owned. I threw that money in a Robinhood, borrowed against it with margin, and investing into high income ETFs. This project has been going on for about 9 months now. And I'm just giving you weekly updates, monthly updates of how the progress is going. With that being said, let's get started. So currently my account is sitting at $77,102.17. The stock market is not having a good time right now. It's continuing to get beat over this last week period. And it's been like this for the last couple of weeks. I'm not having a good time, but there are a lot of people. Whole market's down. Nobody's happy. Over the last few weeks, there isn't much change into my account. Right, I still have the 1 year SPY strike price at the 605. Nothing has changed there. I initially bought this when SPY was trading at the 585, the 590 mark. I thought it was going to be a great discount. I thought it was going to shoot back up to like that $600 range. That has not happened. The S&P 500 continued to move downwards for the last few weeks. So I am holding on to this diamond hand style until I either break even or make some money off of it. Before I really start talking about the nitty gritty individual pieces, I want to give like an overview of how I have my account set up. Because right now, this Robinhood account is strictly a bonus account for me. I'm already maxed out my 401k for my employer, right? The $23,000, or is it $23,500? I forget what it is. I'm already maxing out Roth IRA. So for me, this account, the whole entire purpose of it is to make an additional income stream, right? So that when it is time for me to retire, I can either retire faster and I can live off of these distributions before my actual tax advantage accounts come into play and I won't get penalized for using the money and pulling it out. Or nvdy, the way that I have my account set up, I have 3 tiers of high income ETFs. Tier 1 is very high volatility, which means high NAV erosion potentially, but a higher premium. Tend to NAV erode a little bit more depending on the fund, of course, and depending on the market conditions. But the distribution is going to be higher and the share price is going to be lower. So you can buy a lot more shares at a lower price and get a higher distribution than some of my other tier 2 and tier 3 funds. My tier 2 funds, I usually consider yieldmax like tier 1 because they are trading the time decay and they're paying you out the maximum amount of premium they can that they receive. That's why the NAV erosion is a little bit higher for yieldmax versus other funds like Roundhill or Kurv. My tier 2 funds, I consider them, they're more NAV stable than the tier 1 funds, but this distribution is a little bit lower, but they don't depreciate as much. So my tier 2 funds, I consider them my Roundhill holdings for my xdte and my rdte. And the reason why I call it a tier 2 is the NAV erosion isn't as significant as a yieldmax fund, and the distribution is relatively close or a little bit less. It's not going to be exact because yieldmax, they are maximizing that premium and they are paying you out as much premium as they can, versus Roundhill might hold back some of its premium depending on market conditions, and the premium is going to be a little bit less. Looking at these spreadsheets, I'm going to remove myself from the view so that we can just analyze this data. And with that being said, let's take a look at the weekly distributions. I'm going to zoom in here so I can see the data better. For March 7th, 2025, right, the 10th week of 2025, I had a distribution of $1,210.08. If we look at the progress week over week, the $1,200 is not that bad of a metric, but in some of the other weeks, whenever I have my curve payments, it's going to be a little bit higher with like the 2,000 or my nvdy payments can be higher. The February 28th was supposed to be a big distribution payer for the week. However, I did take a pretty big loss in my MSTR option. To me, to not lose money, I just sold out of it. Moving on to the totals. So the way this works is the account total is how much money I had to put in to make the weekly and monthly distribution. And then the bar graph is currently what my account is valued at. What you guys saw in Robinhood is if I sold out of every single one of my ETFs and my stocks, that's how much I would have left over. So I'd be up about $77,000, right, if I got rid of all of my debt, but that's not how this is operating right now. The market has been down, so my account is currently valued at $271,333.96. I don't like seeing this, and week over week, it has been getting lower and lower. since about January 24th. We definitely hit its highest peak at that 301 mark. And then after that, it's just slowly market just getting beat up with talk of tariffs and uncertainty in the future. Let's look at xdte. So right, as I said, in the white is how much I had to pay for all of the shares. So I paid about $58,750. And if we look at what it's currently valued at, it's about $56,967.22. And for last week's premium, it was $172.14. Moving on to rdte. So for rdte, I put in that about $59,295. And currently the share price of rdte is getting pretty beat up. It's at that $53,912.95. And the rdte premium was the $221.11 here. For my ymax, I put in a investment of $18,882.40, and currently it's valued at $16,674.86. Since I invested into this fund in December, the share price has consistently been going down, 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 and it hasn't helped with the downward market that the share price is getting beat up. Now looking at ymax, the premium is the highest it's ever been, which is interesting because usually the way premiums work is if the share price of the high income ETF is higher, you're going to get a higher premium. When there's a lower share price, you're going to get a lower premium. But for whatever reason, the yield gods have blessed us, and my ymax premium is going to be $278.30. Ymag, I had an investment about $20,000, and currently it is valued at $17,230.66. The ymag premium was $164.17. Definitely a decent premium. However, the market's down and the share price is getting beat up, so not necessarily a fan. All right, moving on to amzp. So for amzp, I had a $40,000 investment. Currently, amzp is valued at that $34,930.80. Since I bought it back in December, right when I did my reallocation of funds, because I was very heavily invested into nvdy, I distributed the risk to multiple funds. And since I bought it back in December, amzp has been maintaining its value. But then once this new year, or specifically once February rolled around, the amzp or Amazon in general is just getting beat up a little bit. No amzp premium. Goop, the share price, I put a $20,000 investment into Goop, and currently it is valued at that $18,772. Don't like it going down, but here we are. Goop premium, there was no Goop premium. It's going to be coming up in a few weeks. Moving on to nvdy. So I bought about $33,884.55 of nvdy. Currently that's valued at $24,810. I don't like how I lost almost like, $9,000, but I do believe nvdy and the market will go back up. The share price will go higher, and then this value will go higher. The nvdy premium, there was no premium last week, or there was no premium this week, but there was one last week. So we should be expecting another one in about 2 to 3 weeks now. Moving on to gpix. The gpix value has slowly increased because I put about $6,000 extra into gpix from that $28,043.97. The fund is valued at $27,017.28. So basically down about $1,000. It's a lot better than some of the other funds I'm invested in, like ymax. All right, for the gpix premium, I had about a $187.67 premium, so not too bad. jepq, I have an investment of $21,915.48. Currently, jepq is valued at that $21,018.19. So the share price isn't down too bad compared to what I invested in. That's what I'm liking. And if we look at the jepq premium, it's also about $186.69. So that's why I consider jepq and gpix my tier 3. They hold their share price a lot better than those high income ETFs like Kurv, Roundhill, or Yieldmax, and you get a decent premium. That is all of the fund values and the premiums. All right, guys, that wraps up the video going over the account for the 10th week of 2025. Right, there isn't anything too exciting because the markets are going down and pretty much people don't want to look at their accounts. However, whenever the markets do recover and the premium starts increasing and the share price start recovering, life will be a lot better. However, right, stock market, you have your ups and you have your downs. We're just happen to be in a little bit of a bear market right now. Eventually it's going to recover. Everything will be back to normal and business as usual, hopefully. But with that being said, guys, have fun out there. Good luck. I'll talk to you later to the next video.